now we have Karan Taurani who's joining us on the phone line to discuss Swiggy's Q2 numbers. Karan, hi, thanks so much for taking the time out and speaking to us. That's Karan Taurani of Elara Securities. Karan, give us the sense of your first take on Swiggy's numbers, because if you take a look at these numbers on a YOY basis, they seem decent, but sequentially, because we've had numbers that were reported earlier because the company wasn't listed, we only had the sequential numbers coming in. If I compare the numbers operationally on a sequential basis, revenue is largely in line with what we were expecting. However, it's a miss coming in on the net loss as well as the EBITDA loss. Give us your first take on the numbers and what you are making of it.
Hi, good evening. So I think if you look at the numbers, they are fair on the food side. On the performance part, they have improved the performance slightly. The gap earlier in terms of growth rates versus Zomato was much more as compared to what it is right now. In terms of guidance as well, they have clearly indicated that they will probably grow somewhere ahead of industry average guidance in terms of the food business. So potentially they are confident of some minor market share gain as well. As far as food segment, again, the profitability is concerned, I think, of course, as they are scaling up and inching closer to the order volume what Zomato would be doing, it's a function of scale as well. And that is why, you are seeing better improved margins. Margins also improving because of better ad revenue, platform fee and other things put together. So clearly it's an improved signal in terms of the food business. Quick commerce has been a mixed bag. I think, on the take rate side, obviously there has been consistent improvement. Growth also has been reasonably good. They've spoken of very strong guidance of doubling the store count as well over the near term. But I think the losses, are significantly high even right now. If you compare this to the larger player like Blinkit, they are operating at largely at a break-even point with, a much higher scale and with a much higher store count and, a similar kind of a guidance in terms of doubling of store count. So I think quick commerce profitability is going to be the major key execution thing here. And second would be the scale on the food business side. Potentially, how can they grow faster ahead of industry average and how can they potentially get some market share back from Zomato on the food business side.
Point taken. My second question to you is, we've recently read reports about how when it comes to the quick commerce business, you have Zepto that has overtaken Swiggy. Of course, Zomato's Blinkit continues to be number one, followed by Zepto and then Instamart. What's your sense on that, given the market share situation, and also on the back of these numbers, do you think that could reverse and Instamart could make its way to number two?
So, if you remember, Instamart did lose out their market share, over the last 12 to 18 months since the time, Zepto has got aggressive. Zepto right now, as per a lot of industry reports, is the number two player as far as quick commerce is concerned. It will take some time, for them to kind of execute well and get this market share back. So, if you look at the strategically in terms of what they are planning to do, they are planning to increase the store sizes by almost about 25-30%, which means that even the SKUs will actually grow. And, with this kind of a proposition, eventually they may be able to get, some kind of market share that they have lost to Zepto potentially. So strategically, the direction seems to be right. But at what cost does this market share come is going to be a key monitorable. I think, the losses also have to converge because investors, who are valuing the quick commerce business rather would give it a premium valuation multiple in terms of EV sales. Only if they see a convergence in terms of losses, only if they see a break even, overall in terms of path to profitability. So they have not indicated so far in terms of, when do they kind of break even the quick commerce business. There's no guidance as such. The only guidance that they have given so far is that by FY27 or rather Q3 FY26, on a company-wide basis, they are going to be, profitable at a break-even standpoint. So clearly, those are monitorables. They have given guidance of the quick commerce business to go to 4 to 5% on a steady state over the longer-term basis. But, guidance on the quick commerce side, two things. One is, how are they going to get the market share back? And the second thing is going to be in terms of the break-even point first before moving to profitability.
Okay, Karan, if we take the kind of profit figures or rather the net loss figures that we've seen right now, these guys have guided that they aim to be adjusted EBITDA break-even by Q2 FY27. Given the kind of numbers we've seen for Q2, do you believe that they're on the path to achieving that?
So yes, as I said, food business seems to be more likely in terms of the path to profitability and in terms of, I think there's a higher visibility there for them to execute well as far as profitability is concerned, because that food segment is kind of limited in terms of competition. We have only two players, a duopolistic market. They have done a lot of innovation in the form of bold and 10-minute delivery and so on and so forth. So if they do a reasonable job in terms of execution, food business side, getting margins of 2.5-3% EBITDA as a percentage of GOV over the next 8 quarters, should not be a challenge. The challenge is going to be on the quick commerce side. They really need to improve take rates significantly from here on, from this band of 14-15% more towards 19-20%. And in this kind of a highly competitive environment, how will they exactly do that is a challenge. Second challenge is also around the spends which are going to happen below the contribution margin, whether you call it the promotion discounts, the NP spends, everything put together. So how are they going to kind of control that? How are they going to balance this entire growth and expansion plan with kind of reduction in losses is the key motive from here on. So food business, we are more confident that they'll be able to execute well both on growth and profitability.
Just on a bidding note to you, just one last question coming in. You did speak about their spends coming in. Now, when I'm reading the shareholders' letter, the cash balance has come in at 4,531 crores by September end, which is lower than both Zepto and Zomato, which have done recent fundraisers. How do you think this is going to help the company remain competitive given this cash balance, and do you expect a fundraising round coming ahead?
So I think the cash balance, if you add the IPO money, for a 4,500 crores, which was the fresh issue, they are largely on par with other players. I think, even Zepto has got close to about $1 to $1.2 billion of cash, which is around about 10,000 crores. And, Swiggy would be at similar levels. It's only Zomato, which is much ahead of peers after the recent QIP that they have announced, which is more closer to, 16,000 crores, which is around $2 billion. So I think cash balance wise, all these companies are kind of almost there. They are well prepared to take on to the mighty e-commerce players which have got deep pockets, who will invest very aggressively in the quick commerce side, whether it could be in the form of higher value SKUs inventory. It could be in the form of expansion into metro, non-metro. It could be in the form of giving offers, discounts, and also in terms of increasing the store count over the near to medium term basis. So clearly, from a cash balance standpoint, I don't see any need for any fundraise to be done over the next 6 to 9 months. We should give it probably a year to see how the quick commerce story pans out. How do they scale up beyond non-metro? What exactly is the strategy by the e-commerce giants coming into quick commerce? And only post that we'll be able to assess the situation in terms of how things pan out.
Karan, great as always to have you on the show. Thanks so much for joining us and giving us your sense on Swiggy's Q2 numbers.
If you like this video, then like, share and subscribe to ET Now.